Good morning. This is Chris Robinson, Robinson Ag Marketing with today's pre-opening grading and lifestyle comments for Friday, November 21st. Well, we made it to the end of the week, but maybe we wish we hadn't. I got to start off and talk about jam beans, right? We are within a nickel of taking out the Monday low at 11:14. You got to remember, we had that bearish report Friday. We settled at 11:24 on Monday morning or Sunday night, Monday morning. We traded all the way down to 11:14 and a quarter. Last night's low, 11:17 and a quarter. So we came within 3 cents. Um, Today has these options expirations. And this is one of those things. What talking about options and why do we use options to hedge? I'll give you a for instance. For instance, we had a couple guys, clients of mine, more than a couple, where we said, okay, we're worried about what's going to happen on this report. So at the time, we bought some 1140 puts. I think we were trading, I don't know, a lot higher, 1150, 11 something like that, 1152. And so we looked to spend somewhere between 8 and 10 cents just as a relatively cheap hedge. Those things on Monday morning traded 28. Then of course we rallied from 1114 to 1169, right? So there you go, 55-cent rally. Looked like we were going to the moon. Everything's fine. Here it is 4 days later, and we're back down to where those things, which had gone from 8 to 10 to trading 28 to worthless to this morning trading 20 again. So that's a good reason, a good case study as to why, if you're a hedger, options sometimes are your best friend because you weren't short futures for the rally, right? So if you had wanted to sell into that rally, you could have. You had that option. If you had been short futures, you would have got and then stayed with it. You would have taken all that heat, all that risk from 14 to 69, right? And you're wondering, okay, where are we going to cover this? So when markets are volatile, options can be your best friend for a hedger because you got to remember, a lot of what I do is looking at trying to maintain protection for stuff until we sell it or re-own it after we sell it, right? So I don't know, options can be a good deal. I know a lot of you guys don't like them. I've been in this business for 32 years. I'd say, in my opinion, that if you're a end user or a producer and you have cash market risk all the time, right? If you're an end user, you're always short. Higher prices hurt you. You need calls. If you're a producer, you're always long. Lower prices hurt you, so you need puts. And no, they're not perfect, but I will say this: when you know you have a big report like we had last Friday, and you know, like days like today where options are expiring, they can really help you capture revenue or defend revenue when you're going into one of these reports. That's all I can tell you. Or if you're an end user, the same thing. It can let you defend against prices blowing up because of one of these reports. So options are for everybody. At the end of the day, I do have guys that trade futures as well. But in markets like this, where we're having, in 4 days, basically we've gone from 14 to 69, almost back down to 14, right? That is a tremendous swing if you're trading futures. And if you're a producer, you're already trading futures, guys and gals, because you're long the physical grain. So you are a futures trader. When I do my seminars, I walk in a room. I'm like, how many of you hate commodity traders? And usually 90% of the room raises their hands. And I'm like, well, guess what? You guys are all commodity traders. Say, you may not care about what happens in the next 5 minutes or 10 minutes. Your risk is what's happening 6, 8 months from now. So you have a longer time frame. But at the end of the day, you are a commodity trader. So don't ever forget that. And that's why we use these options to try and manage our cash position, our cash risk, but also take advantage of things when things go in our favor. So we'll see what happens the rest of the day. Today is December options expiration. These corn traded down to 425 and a quarter. We had talked about all the open interest at 430. Now it's going to be obviously what's going to happen. Are we going to finish the day above or below 425? If you have these options and you're storing corn, you can go buy another week. You can buy another month. I would say get out to March and try and get some time there. The next big risk is going to be the December USDA report, so you probably want to get covered up before at least that. Or some guys are reaching out all the way and going out to Feb options, which protect you to the end till January 23rd. Why is that important? Well, the first week of January, I think it's either the 7th or the 10th, I can't remember. But the first week in January, we're going to have a USDA report, which is going to really lay all the cards on the table from the USDA, the final production number. So yeah, there's risk out there still. Um, Same thing if you got beans at a store, you should definitely get yourself covered up, at least into a March option, if not a little bit farther. Jam beans overnight down 3.25 cents. Again, traded in about almost a 10-cent range, 25 to 17 and a quarter. We're trading at 19 and a quarter as I talked to you, down 3.25 cents. December wheat, 6-cent range overnight from 28 to 22, down a penny. And the big enchilada is going to be what happens today with the protein complex, right? The news overnight, the tariffs with Brazil for cattle and everything coming in from Brazil are history. And we've already seen one market's reaction. I know a lot of you don't trade coffee. Coffee opens up at 2:30 in the morning, which is why I'm a little hoarse. I actually did wake up at 2:30 to see what was going on with coffee. Coffee gap lower. Coffee is a thinner market, more volatile market, but now there's a big gap in the coffee market chart. If you look at the March option, we opened up sharply lower, traded down to 351 in March coffee, and already are back to 360. So there's a $10 range. So if you're not getting enough action, if you're someone that wants action and wants movement, take a look at the coffee chart. A big gap lower on the news that the tariffs with Brazil are over and done with. So we'll see what happens today. I would definitely watch the action in lean hogs as well. Lean hogs did finish a little bit higher yesterday, but today is going to be very, very interesting. We have DEES options expiration in the grains, but also some of you have the DEES options and the hogs don't expire for a while. That's the thing about the row crops versus the protein complex. If you've got a DEES hog option on, it still has 3 weeks to go, 21 days. So I'm talking about December options for the grains. Those are expiring today, and should be interesting to see not only how we settle today, but then how we open up Sunday night, once people have digested whatever happens today. So my name is Chris Robinson, Robinson Ag Marketing. If you're looking for a set of fresh eyes with your grain marketing, if you want my opinion, if you'd like to find out more about what I do, take a look at my letter, sign up, Robinson Ag Marketing. And also, please call me directly. I'll talk to you for 5 or 10 minutes. I'll give you a brief explanation of how my program works. And if you think it might be a fit, we'll give it a shot. If not, no worries. All right, this is Chris. Have a good day. 312 638 8868.